In today's video, we're going to be buying Netflix through NFLY. It's a new Yieldmax fund that just dropped, and I'm going to share with you how I'm able to buy this fund and why I'm buying this fund. Okay, so we earn over $100,000 per year in dividends at this channel, and our performance of value shows that we're still beating all of the indexes. We're up 48% for the year. The S&P is up 17, the Nasdaq's up 33, and the Dow's up 7. So we're beating all the indexes on both a year-to-date basis and a daily basis. Even though I'm down $3,700 today, which seems like a lot to some people, on this account size, it's not a big deal at all. And 0.51, look at the indexes above. We're beating all the indexes. The Dow's down 1.2 today. The Nasdaq's down 1.3. The S&P is down 1.11. So we're beating the indexes on a daily basis and on a year-to-date basis, okay? If you need help understanding how to live financially free out of your brokerage account like me, email me for my e-guides at aikandtodd48@gmail.com. Okay, so you know that I use index-based investing here to get ahead, and I tie all of my leverage to the indexes. So for every $1 you put in your account, you get $4 of purchasing power, okay? I just use a fraction of this purchasing power that everyone is granted in their own brokerage account, okay? For every $1 you get $4 purchasing power. And so my margin debt has risen today since I made way for Netflix, NFLY, the new Yieldmax fund. And it's also, well, it's actually stayed about the same because I sold some things to make way for NFLY. I'll share with you what I sold in 1 second. So let's first get into the chart of Netflix, and let's just see if it's a good time to be buying NFLY. And so when you go to a chart of Netflix, you'll see that it's had a pullback, and it's way off its highs too. The highs of 700, as you can see there on the chart. Let's zoom into the chart, see if we can get a better x-ray on the patient here. Because you can't just look at a banged up knee and say what it is. You have to get an x-ray, and then you can really tell what the problem is. So, and you can really see what's going on. If we do a 1-year chart here, you'll see that we pulled back to that purple line, that 50-day moving average, excuse me. And so we've pulled back a little bit from the recent high here, and again on a 10-year chart you can see that we're way off the highs. Okay, so I think Netflix actually has some good value here. Of all the Yieldmax funds that we own, this one is similar to Amazon and Google in that they haven't reached their old highs yet, unlike an Nvidia, okay, or even a Tesla. Well, Tesla's way off its highs too. So a lot of these Yieldmax funds have some value, and they don't just have really high dividends, in my opinion. They have value. Now let's look at the implied volatility of Netflix. It says it's about 30. So that could be what the dividend is for Netflix. I'm not sure. You guys let me know. So we're looking at a potentially 30% dividend in Netflix. And obviously, I love high yield at this channel, but one thing you have to watch out for with Netflix is the high maintenance, okay? So once again, we're still down only 0.51 as I refresh the screen here. And let's go into what a snapshot of Netflix so I can show you what I mean. When we go to trade NFLY, you'll see a snapshot here, and you'll see the view maintenance requirement, and you'll see 50%. 50%, okay? So that's worrisome because at my channel, I use margin to get ahead, just a fraction of that margin, and you want to be safe when you're using margin. You don't want to deplete your available withdrawal number down here, this 203. You know, I was at 212 recently, but now the market's pulled back. You know, I'm down to 203. So that means that on a 20% correction, I would still be okay, because if you do 500,000, my net account value, plus my 200,000 in debt, okay, this is what you have to always keep in mind when you're using margin. 200,000 of debt plus the 500K that I have approximately in the account. So 700,000. What's a 10% correction? 70,000. What's a 20% correction? 140. So 30 would be about 210, and that's pretty much where I'm at, okay? A 20% correction over the course of a year doesn't bother me though, because we make 20% in dividends from our largest fund, Cornerstone. We have 500 grand in Cornerstone, which is what my account is. My account is 500 grand roughly, and everything else is margin. So if I get a 20% dividend in Cornerstone, then it's going to pay me, it's going to give me a 20% cushion on the drop. So if Cornerstone or the market falls 20%, then I break even, okay? Here's Cornerstone on a Morningstar chart really fast, 5-star fund. This is why I have 500,000 in it, and it beat the S&P over the last 10 years. But the main thing with Cornerstone is, the main reason why I like Cornerstone is the maintenance, okay? So if you go to trade Cornerstone and you look at snapshot, you'll see the maintenance here is only 30%. Okay, the Yieldmax funds are 50%. So for every 100,000 I put in a Cornerstone, it only takes up 30,000 of my equity. For every 100,000 I put in the Yieldmax funds, it takes up 50 grand of my equity. So that's what I always worry about at this channel. That's how I live financially free, is I stay with low maintenance names. If you need help understanding maintenance better, that's in my margin e-guide. You can email me there at akintodd48@gmail.com. I have e-guides on margin, and I also have e-guides on how to play Cornerstone, because Cornerstone is a 5-star fund, but you have to learn how to time it around its rights offerings, okay? It has a rights offering every year, just like many closed-end funds. This Cornerstone fund right here, it's a closed-end fund. And also, not only do you have to time the rights offerings properly, but the market price here of 8, you have to ask for the special drip down here at 6. So every month we get our 21% dividend dripped for a 26% gain here. 652, 28% gain. 642, 31% gain. How about down here, 627, 34% gain. So every month it's 21% dividends reinvested down at this price, 685, versus being up at the market price, okay, of 840. So that's what's so special about Cornerstone. But again, you have to learn how to play that. You can email me for my e-guides there at akintodd48@gmail.com. When you buy my e-guides, you also get my phone number, and I alert you of the Cornerstone rights offering announcement in my Discord chat room, which we're over 200 members strong here. And we have a Cornerstone RO section here. We also have a Yieldmax section, which I'll be uploading this video into shortly. Okay. So we are understanding now. You have to understand that maintenance is the whole key with these Yieldmax funds. Some brokers are 100% maintenance on Yieldmax. So it's really important that you stick with low maintenance funds. 30% is where most of my money is parked at in Cornerstone. Okay, but when we buy Yieldmax funds, we have to be careful of two things: A, the maintenance, and then B, the allocation in the indexes. Okay, so if we go to QQQ and we look at Netflix here, it's 1.3%. Okay, 1.3% right there. Okay, QQQ, Netflix, right? So 1% of Netflix in my account would be about 5,000, because on 500,000, right, 1% would be 5,000. So I can have up to 1%, really 1.3, right? So close to 10,000. Probably about 8,000. I could have about 5,000 of Netflix. So if we scroll down to Netflix, where is it in here? NFLY, 5,000, right? So I plan to keep this position at 5,000 at all times, because that's what it is in the indexes. All right, if it falls 1,000, I buy 1,000, okay? But the better quality Yieldmax funds like Appley, in my opinion, Appley, AMZ, I have 10,000 in those, because they are higher weighted in the S&P and NASDAQ. So you have to watch for these two factors with Yieldmax funds: the maintenance and the allocations in the indexes. Okay, you don't want to just go overweight Tesla or go overweight Netflix, and they're not even a large part of the indexes, and then your account falls as a function of that stock headline risk versus your overall diversification and the indexes. So I'm not going to fall much on a given day. As you can see, again, the market's down over 1%, as you can see above, 1% across the board, and we're only down 0.58. That's because our beta is a lot less than other stocks, since we're in funds and diversified funds that move slowly and have dividends. So that's how I use margin and offset all of the beta and extra volatility, as I tie my investments to the indexes, and the Yieldmax funds are the indexes. They comprise the indexes. But when you have a name like Netflix, you need to keep that position size smaller, in my opinion, so that you can match the indexes better. Last thing, I sold ASG today to make room for Netflix. So ASG, I removed that fund. I also have been building into USA, so that's gonna give me my Liberty All-Star USA, Liberty All-Star Fund exposure there. And my tech exposure that I'm missing from ASG, I'm just going to replace it with these Yieldmax funds. Now that I have so many Yieldmax funds, I've had to get rid of a lot of other tech funds. ASG, I got rid of Fangu yesterday, and Fangu was high maintenance, 100% maintenance, so that helped me bring back some, not only did it lower my margin, but it brought back a lot of precious equity because it's 100% maintenance. So that'll do it for the video, guys, okay? Email me if you have any questions, again, on how I live financially free out of my brokerage account. You email me at akintod48@gmail.com. If you have any questions, leave them in the comments section below. Also, when you buy all of my e-guides, remember, you get free access to Discord, where you get not only the rights offering announcement channel, but you get access to all my other channels for free, and you get my phone number for free, okay? So you can call me anytime. I'll walk you through your portfolio and set it up just like mine if you ever need me to, okay? So hope you enjoyed the video, guys. Click like or subscribe if you did, and I'll talk to you soon. Thanks.